welcome to all of you, whether you're based in Abu Dhabi, Middle East, or Europe, Asia, or Americas even. I know many people are joining very early on the East Coast. Welcome to all of you to this joint ITFA ADGM webinar on the partnership between ITFA and Abu Dhabi Global Market on digital trade transformation. My name is Andre Castavan. I'm part of the ITFA board team, and I'm delighted to be moderating this session. With us today, we have indeed representatives from Abu Dhabi Global Market, as well as representatives from ITFA, which are, I'm sure, also known to you. So I would like first to introduce those panelists to you, and would like Marianne to briefly introduce herself, please.
Hi, good morning and good afternoon, wherever you are. Thank you so much, Andre, for inviting us to sit on this panel. I'm a regulator by profession. I've been in regulation for the past 25 years, worked in different aspects of regulation, authorizations, policy, supervision, enforcement. I come with a European background. I've worked the majority of my professional career within Europe. And I joined ADGM FSRA a year ago. So I'm a relatively newcomer next to Wailam. And my responsibility within ADGM is authorization and supervision of the banking and insurance sector.
Thank you, Marianne. I'd like now to ask Wailum to introduce yourself, please.
Hi, a very warm welcome to all. My name is Wailam. I head up a team of regulators supervising the capital markets sector in ADGM, as well as being responsible for the agenda within ADGM. In my previous life, before I joined ADGM, I was with the Monetary Authority of Singapore for 11 years. So I joined ADGM in 2015. That was the time when ADGM went live as well. So we are a relatively young financial center by standards. So looking forward to the conversations we're going to have ahead. Thank you.
Thank you, Wailum. Sean, I guess no need to introduce yourself, but
we have a lot of new friends in the Middle East. Thank you, Andre. I should introduce myself. I am the chair of ITFA, the International Trade and Forfeiting Association. We've been around for about 20 years. As you don't know us, around 250 members worldwide, and making a lot of headway in the GCC region, thanks to our friends in, for example, Abu Dhabi. So really pleased to be doing this this webinar. Thank you, Andre. Let's pass on.
Thank you, Sean. And Rahul, please, would you introduce yourself?
Yeah, hi, Andre. Thank you very much for asking me to join this panel. Looking forward to seeing how this webinar grows, and then I will make some closing remarks on what we have achieved so far. Thank you,
Rahul. So we have structured a session focusing on our partnership indeed, but before we start, I'd like to highlight the ITFA website sponsors. These are the names, you know them well, and these are important members helping on the sponsorship side of our website. Before we focus on the scope of the memorandum of understanding between ITFA and ADGM, I'd like Sean to introduce how ITFA and ADGM started to work on the electronic transferable records initiative and the recent act that was released by ADGM. So Sean, can you tell us more about how we have started to engage on that front?
Yes, of course. So, I mean, ADGM, as Waikoko said, is relatively new entity in the Middle East and a relatively new market. But one of the advantages of that is that it can be very innovative, and I think it's shown that, in my view, with tremendous audacity by being one of the first countries, I can put it that way, one of the first jurisdictions in the world to bring into effect the model law on electronic transferable records, which is an UNCITRAL law. That's the United Nations Convention on International Trade Law. And that's part of the UN that essentially creates model laws that countries and other jurisdictions can enact in, using exactly the form that UNCITRAL publish, or modifying it. And the model law on electronic transferable records, for those of you who haven't heard it, is a very broad law that seeks to digitize a wide range of trade finance instruments. So those include bills of lading, but also very importantly from a financial point of view, bills of exchange and promissory notes. It also includes things like warehouse receipts. So the important thing to remember about UNCITRAL model laws is that they are not law. The United Nations, whether some people would like it to be or not, is not a global legislator. It just suggests ways forward and provides the material for that. So earlier on this year, ADGM passed the Electronic Transactions Regulations 2021, which is essentially a transposition of the model law on electronic transferable records. And what it means is that within the ADGM jurisdiction, and I didn't mention earlier on, but my day job is as a lawyer, so this sort of stuff does interest me quite a lot. It's actually possible to subject your documents, even if you're not physically within the ADGM premises or the ADGM market in Abu Dhabi itself, to subject your instruments to these electronic transactions regulations. In the same way, for example, as we're seeing a lot of contracts being subjected to the laws of the DIFC. So it works in a very similar way. You simply select the law of ADGM as the governing law of your document, and all of the laws that they pass, not just this one, but others, will become applicable. So this one, as I say, this is all about digitizing those instruments. We were very pleased to help ADGM. It was their initiative, but we're very pleased to help guide it through and facilitate it. The MLETR has been enacted more or less unchanged. There are a few detailed changes that I think are all to the good, we were very pleased to assist them with that. So it's given the influence of jurisdictions such as ADGM and DIFC, it's actually the impact of these regulations are actually going to be felt quite widely and outside of Abu Dhabi. So again, my thanks to ADGM, to their vision, to their audacity, and to their tremendous energy in pushing this through. Andre, back to you.
Thank you, Sean. Indeed, this is how we started on a particular deliverable, and I have here extracted some of the text that demonstrate how electronic records are embedded into the new act. This is just a screenshot from the new regulation you can find on the internet, on the ADGM website. This is for electronic records, and of course also for electronic transferable records, such as bills of exchange and promissory notes, which are a key objective of the model law, as Sean said. Any other comment, Sean, on this text and how the legal text can be adapted to the digital world?
Yes, I mean, the idea of MLETR and the regulations is that it creates a functionally equivalent regime. So anything that you can do on paper, you can now do legally, validly in a digital form. The actual process that you use to do that could be blockchain or it could be something else. It's not mandated either by the MLETR or by the regulations. So it's very broad and it's non-partisan, if you like, in the choice of technology that you can use. We do think that blockchain does work very well with these kinds of instruments, but you don't have to use that. And the important thing about the MLETR is that, if you like, it's a complete answer to the problems that were faced by digital by trying to digitize paper documents. And the main issue about digitizing paper documents, because of course we have a lot of digital paper documents already, if you like, we sign a lot of contracts on screen. We'll be signing, in fact, the MOU on screen. We have done it in a minute. So the real issue is, does it have the same? Do particular instruments which are negotiable? In other words, they have a value in themselves as instruments. They can be passed on through simple endorsement. They give, in the case of bills of lading, they give title to goods. Can you recreate those legal effects in a digital form? And that's always where the problem was, because negotiability implied, until quite recently, the use of paper or some other sort of tangible format. So this is what the model law and these regulations get over. It's a complete answer to all those problems. So if you have, for example, a digital bill of lading, if it's subject to, for example, if it's subject to the regulations, then it will give you title to the underlying goods. So that's essentially how this works. It's the very important. The important thing to remember is that it's not substituting a different format. The format that these or the look, if you like, of these documents will be exactly the same, or can be exactly the same as the paper documents. It's just that now they are valid in digital form. So think all of the advantages, or everything that you could do in paper, you can now do digitally. And that allows you to use, the very efficient technologies that we now have that didn't exist, of course, in bills of lading, which have been around for centuries. Similarly, with negotiable instruments such as bills of exchange and promissory notes, also been around a long, long time. Nobody ever envisaged that something like digitization, let alone blockchain, would ever exist. It's really bringing all this up to date and providing the parallel regime, if you like, for digital records.
Very good. That will certainly reassure corporates that those digital solutions are enforceable, because often the experience we have seen on the banking side is that the banks have implemented a lot of technologies. However, the corporates are hesitant to move on. So those changes in the law are, I think, the last step that was required, the final enabler for corporates to get reassurance that they are protected in terms of ownership of those instruments or goods and so on. Moving on from this step, I think it's now time to outline also how the relationship between ITFA and ADGM has expanded to sign this memorandum of understanding. Can you give us a few words about the scope of this MOU, Sean?
Yes, I will. Thank you. So, as those of you who know ITFA will know, we started around 20 years ago in the forfeiting market, and that market as a forfeiting market has sort of generally been perceived as a shrinking market, and that's actually not true. The problem, though, is that the traditional instruments of forfeiting, which in its heyday really was the way to enter emerging markets. So if you were a forfeiter 30 years ago, you were dealing with markets which the vast majority of bankers at that time, trade finance bankers, did not do. And the reason you were able to do that is because the traditional forfeiting instruments, such as bills of exchange and promissory notes, are known in some shape or form globally. So largely, this is for historical reasons. These were the sort of the legacies of colonialism. But most laws, most jurisdictions around the world have some sort of law that recognizes these instruments. So the problem the use of them fell away was because, as I've said already, they had to be in paper, and there are all sorts of logistical issues around that. You have to transport paper around. That wasn't, for example, particularly convenient last year during the pandemic. Paper can get lost. You have to have all sorts of safekeeping procedures. And of course, it takes time to, if you want to sell these on, which you can do very easily by endorsements and discounting, that takes time as well. So there are all sorts of quite annoying little logistical issues that meant it died. That meant that the use of these instruments died away. But you have to remember the important thing is that they do have a global resonance. They are understood. They have centuries of usage, and so they are well understood. And in certain regions where the law is not so well developed, and until comparatively recently, that was the case of a lot of the Middle East, but it did have the old English and French laws. These instruments were well known. So the first thing we're trying to do is to bring these instruments that are understood, particularly in this region, we're trying to improve their use through allowing the digitization, as we've seen through the regulations. And what that means is it's not just about the forfeiting market. What's great about, for example, a promissory note or a bill of exchange is that it's, I sometimes like to call these sort of trade finance mini bonds, because they are self-contained instruments. Of course, there's credit risk and there's KYC and all the things you have to do around the periphery. But as a payment, as a self-contained unconditional payment obligation, they are, if you like, a complete financing tool. So they're very good for capital markets. And in fact, at one time, again, going back a little bit into history, but the City of London, I mean, used to run essentially by the sale and discounting of bills of exchange and promissory notes. And it's still a very, still a very powerful business model. So what we're hoping as well is to support the development, as we say here, the development of alternate modes of financing trade and mitigating risk, distribution and working capital management through better use of these instruments that are well known and now can be digital. And of course, that means, along with the use of these instruments, is that what we've sold here in the regulations are the legal issues. We need the fintechs to come up with the technical solutions, the platforms, the utilities. As I mentioned, the model law and the regulations are tech neutral. There's a very good case for using blockchain, but it's not the only technology, and the use of any other technology is permitted by the law. So having, and I know ADGM in particular, through their sandboxes and so on, are very active in this area. So bringing in fintech into this area is very important. Of course, we have to educate the population. We have to tell them what's now available. This is new in one sense. So this is something that ITFA is particularly good at, and we'll be partnering with ADGM to spread knowledge. This webinar, of course, is one example of that. And I guess the last point is that it's an ongoing relationship. There will be webinars, conferences when we get back into the real world, and all sorts of other events. We are very active in our webinar program, as is ADGM. But once we start getting back into the physical world, I'm sure we'll all be popping all around the place, and it will be good to collaborate on those. So that's what we're trying to do through the MOU. And I think we'll go probably to the next slide. And as you can see, we did this a little bit earlier on. So we signed this yesterday just to make sure that we were efficient for today's webinar. So there we go, it's in force. And my thanks to Juma and all the team at ADGM for having done this.
Thank you, Sean. Very promising indeed. We have 36 fintechs within ITFA, and there are many more, of course, also in the market that will definitely look at leveraging this regulatory framework. I mean, innovation starts with those who are the most hungry, and definitely ADGM shows how keen they are to promote innovations. So surely we have more things to do together on combining regulatory legal developments with technology developments. So a very promising few months and years ahead. Moving on, I'd like to now focus on ADGM indeed and understand how your environment indeed offers those opportunities. So let's look at your fintech initiatives and how you authorize digital banks, including trade finance activities. I think we'll start with Wailum.
Thank you, Andre, for the introduction. Just let me try to share my screen first.
Yes.
Okay, let me know when you can see it.
Yes, sir, we can see it.
All right. Full screen mode. All right.
Oh, very good. We can see it.
For some of you who might not be familiar with ADGM, we are the International Financial Center of Abu Dhabi, established on English common law. And earlier I mentioned that we celebrated our 5th anniversary last October. And within that short span of 5 years, we have done quite a fair bit of work, especially in the fintech space and the development of the ecosystem. So as we talk in the context of the electronic transactions regulations today, it is really just a part of the value chain that we try to put in place to make ourselves a smart financial center. What I'm going to do in the next 10 minutes or so, I hope to bring you through an overview of ADGM's fintech ecosystem, some of the initiatives that we have introduced that have brought us to where we are today. So when we first started our journey in October 2015, ADGM was a new kid on the block with no track record, no brand recognition, no regulatory credibility. Fintech then was a term not commonly heard of in this region, and the ecosystem was virtually non-existent. But at the same time, starting from a clean slate means we did not have any legacy issues to deal with, and hence we could afford to adopt a very blue sky approach in terms of how we wish to shape the financial center and our rules and regulations. We were able to reimagine and rethink what the future state of financial services and economy would look like. And because of that, we decided very early on that we want to support, incentivize, and find ways to shape financial innovation in this region to arrive at better outcomes and more choices for consumers, greater efficiencies for financial institutions and the industry, as well as better regulatory outcomes when we regulate the financial markets and institutions. So our efforts in developing new innovative regulatory regimes and offerings that bridge the gaps in the ecosystem here have won ADGM several accolades in the last few years, including the International Financial Center for EMEA by Capital Finance International in the last 2 years, the Financial Center for MENA by Global Investors Publication of Euromoney for 4 years in a row, and the most progressive fintech regulator for MENA region by Seamless. So how did we go about doing it? The first thing we did was to put in place a progressive regulatory regime to support the adoption of fintech innovation. So in 2016, we rolled out the first regulatory sandbox for fintech in the region, which we called the Regulatory Laboratory, or RegLab in short. I think most of you are familiar with the concept of the regulatory sandbox, where startup innovators can develop and test their new fintech solutions in a conducive, controlled environment under the guidance of the regulator, allowing them to scale and adjust to the regulatory requirements over time. Apart from the benefits from the startup's perspective, the RegLab has helped ADGM develop into a more sophisticated fintech regulator. And that continuous process of engagement with fintechs help us to get up to speed, both in terms of technology expertise and governance, as well as emerging areas and risks. That in turn facilitated the process where we can introduce very tailored and calibrated regulations to cater to all these new areas of innovation, while at the same time managing the risks into the marketplace. So as a result of all these engagements, we have to date developed some of the most comprehensive set of rules and regulations in the region governing fintech and digital financial services, such as digital banks and payment service providers, digital securities offerings, digital asset exchanges and custodians, robo-advisors, etc., etc. In 2019, two major initiatives under the auspices of the Abu Dhabi government, 50 billion dirham accelerator program known as GADAN, which is the Arabic word for tomorrow, truly accelerated and transformed the landscape. The first was the launch of Hubs and One, a global tech ecosystem that houses a dynamic community of startups, investors, corporates, and policymakers, all under one roof within the WeWork co-working spaces in ADGM. Backed by strategic partners including Mubadala, who is one of Abu Dhabi's sovereign wealth funds, the Abu Dhabi Investment Office, SoftBank, Microsoft, Hubs and One has basically strung all of Abu Dhabi's tech startup ecosystem developmental efforts and programs together, including incentive programs, making it easier for startups to thrive by providing subsidized housing, office space, and health insurance, corporate engagement programs, creating a bridge between the major corporates and the startups that are looking to transform industries and address significant problems and pain points in their sectors, accelerator programs by world-class enablers such as Plug and Play, Techstars, helping founders who have the potential to be local champions with global ambitions. And last but not least, upskilling programs, matching experts with innovators, fast-tracking talent, and delivering excellence. The second major initiative was the investment schemes and funds placement program amounting to more than $1 billion, launched by Mubadala, ADQ, and Abu Dhabi Investment Office to support startups and scale-ups at different stages of growth, to bolster VC activities and attract international talent into ADGM. Now, besides regulations, which is our forte as a regulator, ADGM also played an active role in activating the fintech ecosystem to accelerate the adoption of fintech innovation and transformation of the financial services industry in the region. For instance, we organize innovation challenges every year to source for innovative solutions globally to help financial and corporate institutions address their business and operational challenges. We organize the largest fintech event in the MENA region every year, known as Fintech Abu Dhabi Festival, to bring together the fintech community and top minds from over the world to the region. In the recent virtual event just ended November last year, the event attracted more than 18,500 participants, 150 leading speakers and policymakers from over 140 countries. And leading up to the event, we conducted a global virtual tour to 23 countries to invite the top 100 fintechs to the event to showcase their innovation to potential investors and stakeholders in the region. We have to date established more than 30 fintech bridges with fellow regulators and international hubs to help fintechs in ADGM scale across to other jurisdictions. We are today part of the Global Financial Innovation Network, or GFIN in short, which is a network of more than 50 financial regulators, of which ADGM was among the founding members. Through the GFIN platform, fintechs are able to conduct cross-border testing between multiple jurisdictions under the supervision of the participating regulators. We work with like-minded community partners to help set up the MENA Fintech Association with the aim of fostering a private sector-led, sustainable and vibrant fintech community to spearhead the fintech agenda. Encouraged by the success we have achieved so far, we have started on the next phase of innovation. In the GCC region, the digital transformation agenda has steadily become an important focus in almost all financial institutions. So to support the digital transformation agenda of the industry, we invested in technology to transform our regulatory sandbox from analog to digital, enabling innovation and growth in a new model of partnership between the regulator, startup innovators, and the financial industry. The Digital Regulatory Sandbox, or Digital Lab as we call it, is version 2.0 of our sandbox. It provides an online marketplace where fintechs and financial institutions such as banks can co-create and test solutions to solve real problems in the financial sector, with participation and supervision by the regulator real time. We believe that Digital Lab is a game changer in terms of facilitating digital adoption and accelerate the open banking and open finance agenda. It is not just a testing ground, but it's also a marketplace to build the digital community. Participants can create profiles, showcase their products and services, as well as seek investors and business opportunities from a like-minded community in the digital marketplace. Equipped with APIs, digital toolkits, and synthetic data sets to create representations of the financial institution systems in the digital lab, the financial institution may post problem statements and invite fintechs and regulators to run POCs and prototypes that can lead to eventual production. And the potential is enormous, right? Imagine a startup from anywhere in the world co-creating and deploying solutions with a bank in the region, with participation from the relevant regulators around the world, of course. So we are currently working on how fellow regulators can participate and utilize the enlarged virtual environment in the digital lab to run co-sandboxing programs, with the ultimate aim of enabling firms to carry out simultaneous testing in multiple jurisdictions, making cross-border compliance easier. And a very useful use case I can think of is exactly in international trade finance. Right? So in supporting open innovation and collaboration among industry stakeholders, the digital lab is a tremendous enabler to accelerate the digitalization of industry ecosystems, not just solutions. So for instance, when ADGM's, with the ADGM's recent enactment of the electronic transactions regulations to allow the use of transferable records, negotiable instruments such as bills of lading, bills of exchange in electronic form, we are excited by the possibility of enabling the interoperability of trusted digital documents in the space of international trade. In this regard, we are now exploring leveraging the utility as a digital lab as a utility to legally recognize cross-border digital trade documents such as bills of lading, certificates of origin, invoices, etc., through multilateral G2G recognition and B2B connectivity to facilitate the exchange and deployability of transferable trade documents between countries. So to conclude, I'm proud to say that in a short time span, through the collaborative efforts of our various partners and stakeholders like ITFA, we have managed to build up one of the most sophisticated fintech ecosystem in the region. And for that, of course, we have the strong vision, commitment, and backing of the Abu Dhabi leadership and government to thank. But excellence is not a natural state. It comes from lots of effort. We need to constantly find new and better ways of doing things as we adapt to the ever-changing demands of the financial services sector and consumers. To this end, ADGM remains committed and is committed to continue working closely with the industry. So with that, I've come to the end, and thank you very much for listening.
Thank you, Wailum. And indeed, I can recognize the ADGM Reg Lab that one of the ITFA FinTech members is taking advantage of since a few years. Indeed, this is XinFin, TradeFinex, applying their technology on tokenization of trade finance assets. So this is a topic we're going to grow within ITFA, and definitely this is another track where we can work together. Very, very encouraging. I have a question from Bhavna. Hello, Bhavna, asking whether you're talking to regulators in other countries to share your approach. I think you partially answered it during your speech. You want to tell a bit more?
Sure. I think I think you all know that there are only 3 jurisdictions in the world today that has got the comparable legal framework. So yes, conversations have started. I'm not at liberty to share more, but when it gets announced, hopefully it should be something which is encouraging for the industry.
Yes. Early adopters always become role models for the followers. So you're definitely in the right group there of future role models. So moving on, thank you, Wailum. Moving on to Marianne, who will talk to us about how ADGM enables indeed digital banks.
I'll be sharing my screen.
Sure.
Okay.
Yes, we can see it.
Is it visible?
Very good. Yeah.
Yes. Okay. Thank you for that. As explained by my colleague Wailam, the fintech strategy is very much embedded in the DNA of ADGM. And as a result, our regulatory framework lends itself very well to the establishment of a wide range of business models in the digital space, including trade finance, SME lending, and digital banking. And as a matter of fact, the authority has already licensed a digital bank, AG2B, and we've approved the second one already. And we also recently approved a digital lending platform. So all these efforts are also translating themselves into real licensed entities and operators. And we continue to see a lot of interest, and we're handling a number of proposals between collaborations between financial institutions and fintech operators. We believe as FSRA that innovative banking and trade finance solutions can promote inclusion, will definitely position more and more the financial sector for the digital economy of the future. It will ensure sustainability. And so we encourage and we welcome applications for innovative business proposals, both from established banks and established entities, but also from firms with innovative business proposals that can demonstrate a unique and innovative value proposition to serve the needs of the industry. Obviously, within all of this, meeting the FSRA authorization requirements, which are based on international regulatory standards. We want to see growth in this space, but definitely in a robust and sustainable manner under a strong and regulatory framework. In trade finance, for the purposes of this presentation, I will focus, as explained, on the authorization requirements for trade finance and digital banking. And trade finance can be carried out either through, in conjunction with deposit taking, which would require a Category 1 license from FSRA, or else without deposit taking as an activity in its own right, which would require a Category 2 license. The category of license makes a difference insofar as certain requirements are concerned. Many are common across both license categories, but as I go through the authorization requirements, I will highlight any differences between the two. Establishing and operating a trade finance operation, as you all know more than I, is quite a complex operation. I mean, given all the parties, all the different products that may be offered, all the different jurisdictions, given the cross-border nature of trade finance, and the increasing regulatory requirements that apply, especially in the financial crime area. The requirements for authorization are similarly extensive, but the objective is one. The objective is that for us as a regulator, we want to ensure that a business proposal is sound, it's sustainable in the longer term, all the risks are well identified and mitigations are put in place. So once we license an entity, we feel comfortable, we have the comfort that that entity is there for the longer term, which is of benefit for the entity itself. After all, the investment put into putting such an operation together, but also for us, because we want to see the growth of the center in the longer term. So here on this slide, you see first what we call the threshold conditions. And these conditions form the basis of the overall assessment when we are considering a business proposal and cut across the whole process. And from these threshold conditions, we here outline the main areas that we look at when we are assessing a business proposal for a digital bank or a digital trade financing operations. And then go through each one. I'll give a brief overview of what we look at for each requirement. Before doing that, however, I would like also to highlight that we adopt quite a pragmatic approach as a regulatory authority. Where applicable, requirements are applied on a proportionate basis and a proportionate manner, depending on the size and nature and complexity of the proposal. However, obviously, certain critical requirements, such as, for example, governance, they would remain applicable respectively. The business plan, let me start from that one. The business plan is a core document for us. This is the document which outlines all the thinking and what and how the business proposal is all about. And this is the document through which we really get to know the entities and the parties. So this is the document where we encourage any applicants to dedicate a lot of time to. It should be credible and comprehensive and effectively describes the proposal's rationale, outlining clearly the regulated activities to be conducted. So we ensure that the proposal is viable and sustainable. It should demonstrate a clear link between the target market and the customers and the proposed services to be offered. And key aspects that we look at would be the revenue and funding model, and this is quite critical in trade finance operations. The key dependencies in a trade finance proposal, and especially the funding model, particularly where there is no deposit taking activity being carried out in parallel to trade finance. We need to understand the customers and the geographical spread, the products, which part of the process is going to be digitized, and the added value of that proposition. We have a template which we encourage our applicants to follow, because if the template is followed, then all these points should be addressed, and that would make our conversation and the process much more efficient. We also look at the legal structure in terms of requirements. Any operator is required to maintain premises and carry out operations from within the ADGM. If it's a banking operation carrying out also trade finance, then if the parent company is another bank, it's possible for that bank to establish a branch here, subject to getting agreement from the home regulator, but also to establish a subsidiary. In the case of a startup entity engaging in trade finance, that would need to incorporate a company within ADGM. We also look at the ownerships, the ownership and controllers of the entity. This is a critical aspect of the authorization process. We need to make sure that the people who are directing the business are of integrity. We carry out due diligence on persons and controllers holding more than 10% within the entity. And something I'd like to highlight, if it's a deposit-taking operation, the generic requirement is that there is a parent bank owning the majority shareholding. This is not applicable for trade finance entities which are not deposit takers. Apologies. Another aspect that we also give a lot of focus on, and we spend a lot of time discussing with applicants, are the staffing requirements. There are certain positions which we call controlled functions. All directors on the board need to be approved and licensed by the authority, as must the senior executive officer. These are critical requirements. We need to ensure that these people who form the mind and management of the entity are what we call fit and proper in terms of their integrity and their competence. We expect the board. We expect the board to have diverse competence to address all the different aspects of the business operations. And while we look also at the individual competencies of individual board members, we also take a holistic view of the board's composition and competence in line with the business model. And the same for the senior executive officer, who would be carrying the main responsibility for the day-to-day execution of the business. We also look at the compliance officer and the MLRO and the finance officer, and in digital setups, we also, although not mandatory, but naturally, we also expect there to be a chief technology officer with the adequate knowledge and skill and expertise to carry out and take care also of the digital aspects of the business. So for digital operations, we expect there to be knowledge from the regulatory side to ensure compliance with all the regulatory requirements, knowledge on the technical side from the day-to-day business operations, but also from technical side, from the IT side perspective, because of the digitized nature of the business. Directors are not required to be based in HGM, although we expect the majority board meetings do occur within HGM, while the senior executive officer, compliance officer, and MLRO are expected to be resident in the UAE. Again, why do we spend a lot of time discussing staffing resourcing? This is key and important because, especially in startup entities, one cannot afford to have a lot of turnover of staff in the beginning, especially until the business settles down. And so retention should be thought of. And again, I mean, it can be quite challenging finding the right people with the right knowledge and skills and expertise. So we do encourage applicants to really think hard and invest time in thinking about who they would want to appoint in these key positions. Another aspect that we look at is the governance and the management systems and controls. This is fundamental. As I said, the objective of the authorization process is not to make life difficult, but to ensure that a proposal is sound and robust as much as possible, and that the key risks are identified and dealt with in a proactive manner. And governance plays a big part in that. So we would expect to be presented with an operational structure, apportioning significant responsibilities between the board and the senior management, with proper segregation and adequate controls. Again, always with the objective of ensuring longevity and operational sustainability. Linked to governance, again, risk management and operational resiliency is an area that we discuss a lot with applicants. applicants are expected to put in place a system of risk identification and a system of controls as to how any identified risks are managed and mitigated. They're expected to have an internal risk assessment process in place, which to ensure regular assessment and updating of risks. And we find that this is quite important in trade finance, because trade finance is inherently risky given the complex business nature of the activities. In these type of proposals, we also see a degree of outsourcing. And there are a number of requirements that an applicant should be aware of when considering outsourcing any part of its activities. They need to ensure that to whom they are outsourcing, the third party has the necessary experience and capacity to deliver what is required from them. There is regular monitoring, but the fundamental point here is that responsibility cannot be outsourced. Ultimately, the licensed entity will remain responsible for any activities or processes that it outsources to third parties. IT risk and cybersecurity and financial crime. These are very, very, very relevant to what we're discussing today. IT risk and cybersecurity are key in any digital proposal. And here, this is where the digital lab of ADGM can come in useful in testing digitized processes or APIs before proceeding any further with launching a business. Obviously, as regulators, we need to ensure that systems are robust. They're tested prior to launch. There are proper policies and procedures in place against cybersecurity, which is one of the new risks that arose with digitization around the world. And we would expect an independent review and testing before the start of operations of the IT systems. Financial crime. Financial crime also is a key consideration. It's amplified in trade finance. There are increased AML and sanctions compliance requirements in this area, given trade-based money laundering risks. And again, here we need to have the comfort that the MLRO, the management, are aware of this risk. They give it the due importance as part of their risk management, monitoring and risk management processes, and that they have comprehensive policies and procedures to ensure that this is done on a proper and a regular manner, and also ensuring that they have the necessary knowledge within the company to address this. Three last aspects that we look at. There obviously a business needs capital, needs money to be able to operate. And here we outline the capital requirements, both for a Category 1 license and the Category 2 license. Trade finance activities, including deposit taking, and trade finance without deposit taking. They're clearly outlined there. Again, I can't emphasize the importance of this, because this is fundamental also to ensure the operational strength of an entity, and also in handling any risks or issues that a business may face from time to time. Business continuity. business continuity we feel is relevant both to deposit-taking entities and non-deposit-taking entities. We'd like to have comfort. We'd like to see applicants thinking about the assessment of potential disruptions and be prepared as to how they would deal with certain scenarios. I mean, COVID-19 has been a test case of business continuity for everyone across the world. So this is quite a real aspect of operations. Then we also may have discussions on exit plans, and this would be more relevant, more of a focus for banks and deposit-taking entities rather than non-deposit-taking entities. And the reason there being because obviously when you're taking deposits, you are utilizing the monies of customers to fund your activities. So there are additional consumer protection issues there. But all in all, these requirements, these aspects that we look at when reviewing a proposal for a trade finance operation are always focused to ensure that there is sustainability of the business and proper risk mitigation, and ensuring that, as I said in the beginning, that the proposal is as robust and as robust and as possible to ensure longevity. And then here I would just like to finish off with a description of the authorization process. As mentioned by Wailam, there's the Digital Lab, which is a digitized version of the Reg Lab, and where the FSRA would be able to supervise the testing in a real-time digital environment of technologies and API connectivity being proposed by entities. Now, obviously, the Digital Lab is very much dependent on the type of the use of the Digital Lab is very much dependent on the type of technology that the applicant wants to use, whether it's a novel technology which would make sense for them to have it tested within the Digital Lab, or whether they're going to use technology which has already been tried and tested. Then, depending on whether one is going to use the Digital Lab or not, then the normal process for the authorization can kick off. We usually encourage applicants to have a meeting with us. Our teams sit down with the applicants to discuss their plans and the application requirements. We adopt a very engaging approach, but having said that, we always encourage applicants to get expert advice, because ultimately the responsibility is on the applicant to meet the authorization requirements. So we encourage the applicants to have a meeting with our team. Our team would immediately highlight and draw attention to any major stumbling blocks or any aspects that's fundamental aspects in the proposal that has not been taken into account. Applicants are then ordinarily advised to submit a draft regulatory business plan to formalize their thoughts and their proposals in a slightly more concrete manner. And the FSRA would review and provide feedback in approximately 2 weeks. And at this stage, we would give our indications, yes, we see this as a viable viable proposal, and you know, we will, or else we'll indicate, listen, there's more work to be done on these areas, and guide the entity accordingly. Once an entity feels ready, then they are welcome to submit a full application, taking into account or pre-application discussions and guidance provided. And depending on the comprehensiveness and completeness of the application, the FSRA would endeavor to review and assess the application within a minimum of 10 to 12 weeks. This process would entail the FSRA providing written feedback on the application documents, and having a number of discussions, meetings to clarify any areas which were identified against the authorization requirements that I've just described. At the end of which then a recommendation is made to the authorization committee within FSRA. And if the authorization committee is happy with the proposal, then what we call an IPA, or in principle approval, is issued. And ordinarily, this in principle approval would be issued subject to a number of conditions to be satisfied in advance of the granting of a financial services license. But at this point, the entity would have certainty before investing further in establishment of the operations. It would have certainty that if it satisfies these conditions, then it would get a license. And just to give you an idea of the type of conditions that would ordinarily need to be satisfied as part of the IPA, would be the incorporation of the company, finding offices, signing of lease, recruitment of staff, and those sort of administrative aspects. Once those conditions are satisfied, then a license is issued. From our experience, it does take time for applicants to put their operations set up their operations in practice, and we maintain ongoing dialogue with our entities throughout the whole process, but also after the IPA is issued, until the license, they are granted the license, after which then they will be passed on to the supervision team, and they start engaging with the supervision team. As I said, we look forward to, we engage a lot with applicants, and we look forward to answer any queries that you may have. And these are the email addresses of the authorization team, so please do reach out with any proposals or any queries that you may have. And we also look forward to engaging more actively also with ITFA and the members. Thank you very much.
Thank you, Marianne, for this very comprehensive overview. And definitely will be quite attractive to established banks, but also new banks to set up their legal entities there. So will be interesting to see how this develop over time. Again, I can already think about some use cases where some of the ITFA FinTech members have already an entity in ADGM that we could work on together. In the area again of tokenization. Moving on our rich agenda for a couple of minutes, just wanted to highlight that on the ITFA side, we're focusing on interoperability of technologies, and as part of the development of regulatory frameworks and the adoption of the MLETR, as we have heard today from ADGM for electronic transferable records, we have developed the DDoC specifications which demonstrate how technologies can be combined to achieve not only electronic signature, which is a use case which already exists since many years, but to achieve electronic originals in a fully interoperable way. So these DDoC specifications are available to the industry. It defines how technology can be leveraged by financial institutions, their clients, their investors, as well as specific platforms like bill of lading platforms in logistics space, in order to exchange indeed electronic originals that can represent negotiable instruments, guarantees, and so on. You may have seen some announcement last week of how Finastra has taken advantage of those specifications. We had China Systems last year, Finastra this year. Again, that's how an association can help the industry progress by developing frameworks. And we have focused on the technical layer, not on the business layer. As you know, in trade finance, the business standards are developed by ICC. So those developments are available to you, and happy to answer any question after this session around this framework. At this stage, I'd like to ask Rahul to share his views on those developments.
Thank you, Andre. Appreciate. And I made some closing comments. So let me just kind of talk you through over them. So I would say, in the closing remarks for this webinar, I want to take a few moments to reflect on the journey that has taken us to this point, and also to thank some of the people who made it happen. At the onset, I would say that the ITFA Middle East Regional Committee, or MIRC, as we call it, we are absolutely delighted to see the successful signing of this MOU. This journey actually started around 2 years ago, because ITFA MIRC, as we call it, we run various business roundtables. And within these business roundtables, we identified that the development of trade finance in the Middle East requires expanding credit capacity from both existing providers and also bringing in new providers who would expand credit through new solutions and new instruments. To help facilitate these goals, the Middle East Regional Committee has been actively working on many fronts. These include facilitating trade finance distribution expansion, ecosystem growth from fintech participation, but then most importantly, we have also been engaging with local regulators to summarize to them new and emerging methods of trade processes, which then impact trade financing itself. So this MOU is actually a culmination of efforts which started, originally from a Dubai conference, where we met Dr. Bhaskar Dasgupta 2020, when human face-to-face interaction was still normal. And I must give all credit to Dr. Bhaskar and ADGM, who really understood the value of collaborating with industry bodies like ITFA. I also feel that these cooperation efforts are a really good example of how global collaboration now works, because local ITFA Middle East regional initiatives led by distinguished individuals like STEMI and Nora are now ably supported by ITFA global leaders like Andre and Sean, and then lead to the creation of this very forward-looking MOU with ADGM. And then I would also like to comment that the opportunity that lies ahead for us, which is captured in the MOU objectives, like understanding the evolution of trade finance to digitization of trade instruments and application of fintech. This is a subject of interest to many market participants around the world. Thus, being able to forge capabilities in these subjects is actually leapfrogging ahead to the next generation of trade finance solutions. So I'm really expecting much more exciting announcements from this team. And then lastly, but not the least, I would say, as the MOU objective states, I'm really looking forward to participating in the joint educational activities and sharing domain knowledge. MIRC, as we know, we are very humbly acknowledge the fact that we have a great deal to learn from the future roadmap of the regulators. So we really look forward to collaborating with ADGM to make the MOU a big success. So thank you very much for all the participants on the panel today, and I hand it back to you.
Thank you, Rahul, for all your work, first of all, on this front, and being part of the core team who made this happen. And for joining and sharing your insights today. Sean, you want to also say a few final words?
Try and come off mute. Well, I think Rahul said it very, very eloquently. I mean, we do, as a global association, we do have a lot to offer, but we can only do that and be successful locally with the with the help and in partnership with really influential local players. And clearly, ADGM has demonstrated that, both its vision and its energy. And I was very impressed with both of the presentations, just how forward-looking at the same time, very professional an organization ADGM is. So we do look forward to, the thing about tech is, what we've talked about in the first part of this seminar, which is the law is really only a platform. It's the really first, it's the first starting point. You can't progress much further unless you have a stable legal system, but actually to make it a success, we need all the other things that we've talked about today, the engagement of the regulators, that robust system for vetting participants, because if participants go bust quickly, then you don't have a stable market. All the fintech players who are able to test the environment through the sandbox, for example, through the initiatives that ADGM have talked about. So it's a really exciting opportunity to be working with you. I mean, you mentioned that there were only 3 jurisdictions that have the MLETR in place. 2 of those are in the Middle East. So it's a very forward-looking region. It's very dynamic. There's obviously a move away long-term from oil, and but I think you really are showing the way, and really thrilled to be partnering with you. Thank you.
Thank you, Sean. And again, it leaves me to thank also Marianne for joining us today and sharing more about how ADGM is developing on the digital banks front, and Wailum also on the fintech initiatives. I have already a few ideas popping up in my mind in terms of practical next steps we can work on together. So with this, I'd like to close this session. It has been recorded. For those of you who want to share it with colleagues or replay, you will be able to access it through the ITFA website and possibly also through the ADGM. We will keep you posted on where to find it. Again, many thanks, Sean, Marianne, Wailum, and Rahul for joining us today, and have a good rest of the day. Bye-bye.
Bye.
Thank you.
So much.
Bye.
Bye-bye.